Well, yesterday the Dow Jones was down 900 points. It's been down 300 points today. What a great fortune we have to have Charles Nenner with us today. Charles and I have been talking about things for many years that are going on right now. Charles, you have forecast the war cycle for years. What is your take of what's going on now? What are your charts saying? Is it going to get worse? I mean, we have war in the Middle East. We have trouble with Iran. We have trouble with the Hezbollah and Hamas. We've got war in Ukraine. We've got problems in China and Taiwan. You talked about this 10 years ago. What are your thoughts now?
Well, nothing has changed. The long-term cycles are still up for a longer period. Very short term, we could have a small break for a couple of months, but it's going to get worse. And like I've been saying all the time, the big problem is going to be China and Taiwan. And who knows what's going on? There's a major thing going on in Europe. I mean, the European countries are losing totally control over the immigrants. And they're soon going to have Sharia law over there. It's a major takeover in the whole world.
Do you think they're going to get together with the Ukraine? I mean, Trump came in. Trump campaigned on the fact that this war in Ukraine has got to stop, and he now seems like he's getting so much resistance from the European community that they want to continue the war. I just saw this morning. This guy Tusk in Poland is talking about raising his army to 500,000 troops to combat Russia.
Well, they seem to listen to Zelensky. I still think the whole thing is about the NATO getting too close to Russia. And if Zelensky only would say we will not be part of the NATO, that would solve it. It's going to be that in the end anyway. They're going to solve that. So in order to get a lot of money, he convinced the Europeans that Russia is not going to stop taking over Ukraine, but is going to take over the whole of Europe, which is totally nonsense. It costs a lot of money. People are really suffering. You know, I'm from Amsterdam. They're really suffering because there's not a lot of money available because everything goes to Ukraine. So I think Trump more or less got who Zelensky was, but the Europeans got afraid that he says, we're going to stop Russia from taking over Europe. So they're building armies and spending billions and billions of dollars.
So do you think that Trump's efforts are going to be successful? He wants this war to end. What do your charts say? Does it look like Ukraine war is going to end?
No, not for the moment. It's like we talked about it, 1914, 1918, First World War. They go up 1 mile and they go back 1 mile, and actually nothing is moving. You can't move over there. Nobody's going to take over anything. What does it mean Ukraine is going to win? They're going to take over Moscow and take over the whole of Russia? It's totally nonsense. But, you know, you don't know who you're talking about anymore. But I think Trump got it. And Zelensky is you know, actually he's a clown. If you look at the YouTube and you see his performances before that, he was a clown and he wants to play the big guy. And he doesn't want to give in.
So do you think we're going to get a truce at all, like a break? Or you obviously think this is just going to continue? This is just going to escalate. Is that what I'm getting from Charles?
I don't think it's going to escalate. I just continue like this, you know, and millions of people die. And they're just going to continue the same way and nothing moves. Nobody moves forwards and nobody moves backwards.
Well, not only is it a tremendous loss of life, but it seems like it's just sapping all of the capital out of the economies of Europe. Europe is in terrible trouble, is it not, Charles?
Yes, it is. It is. I have friends who used to work and sent their children to the kindergarten that was subsidized. There's no money for subsidized anymore. So now they stay at home because it's cheaper to keep the children at home and not go to work. So really? Everybody's running out of money.
And I understand that the German industry is just coming to a standstill for energy. I'm hearing that they haven't got the energy to do smelting and to do forging and to do production. What do your charts say about places like Germany and France?
I don't specify that very much. I like my work is to know what happens in markets, when it happens, what the levels are. And like, for instance, we said a year ago, people who own houses, hedge yourself and buy long-term puts.
Mm-hmm.
I think Lennar went from 200 to 120, told the same thing. I mean, people have a fortune over there. I told them to take the fortune on the puts and sell and buy some out of the money puts. I think they have already backed the whole assets that they might lose. Even if they lose the whole house, they already have the money back. Why exactly? We didn't know a year ago. It was just cycle showed it, and the price target shows it. And as you know, I don't think I'm a better fundamental researcher than other people. I came to Goldman Sachs as a medical doctor,
Mm-hmm.
not as somebody who studied business, just because I developed all these programs that work very well. So I usually don't talk about fundamentals too much.
Well, it's taken you and I have chatted together for 20 years, and it's taken me a long time to get my head around the fact that it's what is going to happen. We don't necessarily know why, and you mentioned it. So I'll tell you one of the whys I'm looking at in our business is that Melody Wright, who's a financial analyst and does loans, talks about mortgage loans, has come out and said, and Wall Street Journal too, and this goes right with, it's just amazing, Charles, how this goes right with your work, is that they're now saying that there's 1 million FHA mortgages in the United States that are delinquent, and the mortgage payment was being paid by the Biden administration to hide the fact that people weren't paying the bills.
Well, I sent out a chart about half a year ago that the credit card that people have to pay goes through the roofs, and the saving rates is almost zero. There's no money available. So I guess, it's going to be a problem. But we talked about the cycle in the housing market, and we talked about, I wrote it also up in 2006. I had the same situation. I told everybody buy these long-term puts. I remember Lennar went one, I think, from 200 to 1.5. I bought it at 1.5, but to my sorrow, I sold it at 6, and it went back to 200. And we had the same situation now. So the housing market is going to follow, because the insiders already sell the stocks. They know what's going to come.
Do you have a timing? We've noticed that we've peaked, and of course in my market we've peaked a couple of years ago. It's been a slow. That famous saying for bankruptcy is that, how did you go bankrupt? Well, I went very slowly, then all of a sudden, and we've had this very slow decline in housing. Are you expecting a quick decline coming like we did in 2008 and 9?
Well, if I just out of my head, if those stocks are not told what are they down 50% or so, I don't think they're that low, and they're not finished yet for no reason. Something is coming. Usually people who are buy gold, insiders buy gold stocks instead of gold. People who are insiders in crude buy oil stocks instead of crude, and people who are insiders in real estate work with real estate stocks and not with the real housing prices. And what I hear about New York real estate, that everybody's underwater, the banks are never going to get their money back, and it's just a matter of when the media pick it up, and then we have a crisis.
And speaking of gold has been in the news in the last couple of weeks, talking about the movement of gold from Europe to the U.S. Is this part of your war cycle? People trying to get their gold out of Europe?
Well, first I heard that half a year ago was the other way around. They brought back the gold to Europe because they didn't believe the United States really had the gold. And I heard rumors that's why gold is going up, because they're covering the short gold position. Lately, I hear what you say, but not too much. So I'm not so sure if that's what happens. The lately I still heard is that the Europeans prefer to have the gold in Europe, but if they think there's going to be a big world war, they prefer to have it in the United States.
Well, I think capital flows whenever there's going to be a problem. It moves out of the conflict zone, does it not?
Yeah, but I think United States is going to be a big problem. I think we're filled with terrorists that came to the border. I heard from insiders that they built nuclear bombs the last couple of years by bringing on very small pieces that nobody picked up. And they had to bring, let's say, 100 times small pieces, and then they put them together, and then they have a nuclear device.
So do your charts show that the U.S. is going to have trouble as well?
New York, we talked about the social unrest cycle of
Yes.
60 years, and that's what's going on. This I don't know because it hasn't really happened. I can only build cycles of things that happened in the past. So I know about the 60 years cycle of social unrest. That's why it started again in the 2020s and in the 1920s, but this has never happened before. I just hear from insiders that the way they brought this on the United States is by bringing in very small pieces that went to the customs because nobody thought it was anything.
Well, and the border was wide open, Charles. We're in Arizona here in Phoenix, and of course, the cartel is right on our border. I mean, it's in the United States, so Trump is taking care of that. But I wouldn't be a bit surprised at all. An awful lot of bad people into our country. Listen, I want to ask you. We're talking about this, and it seems like all of these issues are culminating all at once. Do you see, we've talked about a recession going into 27, 28, and 29. Do you see that imminently starting?
Yeah, it started already. When you will look backwards, you will see it started already. And we talked about that time that people don't know that once the inverted yield curve goes above zero, in 100% of the cases of the last 100 years, there's a recession. So we might actually definitely have a recession. Probably much worse than a recession, I think, a depression. Again, we once talked about that the cycles that led to the crisis of 1928, 1929 are close to topping. So the very long-term cycles are topping. And I feel sorry for Trump because, it's not his fault that the cycles are against him, but it's going to be big trouble.
Well, we had talked privately. One of my concerns has been the amount of debt. It kind of creeps up on you, but we've had Janet Yellen has presided over 42% of all debt that's been created by the United States has been created in the last 20 years.
Right.
And so do you think this is like a debt super cycle?
Yeah, that's how all successful societies go under. People become a bit lazy. You have to keep them happy by giving them subsidies. The students, the people get food stamps, whatever, and it's going to cost you a lot of money. And you have to subsidize all kinds of things in order to keep, there's no people who really want to put their shoulders under something. And that's usually the end of a society. And then it breaks down because the interest payments are already, I think, soon 50% of the GDP. So that's the end.
Well, as a layman looking at your cycles, it's really interesting how they all kind of go together. You just start talking about interest rates going up because you and I did a video almost the exact bottom of the interest rate cycle. I mean, you called it and said that that's it. And we did a video almost to the exact day. It was truly amazing. And when you have all this debt and all of a sudden now it starts really costing, like you're saying, it costs a lot of money. It seems to take all that extra funds and it adds to social upheaval. And this is what you're seeing in Europe, is it not?
Well, but people still don't realize. I tell you, we went short NVIDIA, what we had, NVIDIA, Google, Amazon, Microsoft totally collapsed. I couldn't get anybody out. Even people who watch my cycles for 20 years, because the cycle topped and it took weeks and weeks until they start coming down. So they thought this time it's not going to happen. And it says, well, there's a little chance it's not going to happen. And now, they're in big trouble. They have losses of 40, 50% on those major stocks. So this is also going to lead to recession because the buying power is going to go down.
Well, a lot of people's equity this ghost equity, they think that they're very wealthy on paper, and of course, they ramp their lifestyle up, do they not? I mean, I'm worth $10 million on paper, and then all of a sudden you lose 40% of that. You don't feel so wealthy anymore.
Well, I've seen that happen in 2007, 8 in the crisis. People that we thought are multimillionaires. Everything hangs together. There's a loan against this. There's a leasing against that. They don't own the cars. They don't own the house.
Right.
It's just, overextended. And once it breaks down, everything breaks down.
Do we have a time frame on that, Charles?
Of what?
When you think we're going to start really recognizing? These recessions kind of creep up on you until all of a sudden they're just so evident that everybody realizes it. Do you have a time frame as to when we're going to really
these very long-term cycles that I warned about in 1926, but I said it's a yearly cycle. That means it's like if you have a daily chart, 1 bar is just 1 bar. If I miss it by 1 bar, it could be the end of 25 also. So late 25, 26, we're going to get in major trouble.
So this is coming right up on us. Well, do you think interest rates are going to come down as we go into recession? Is the government going to?
No, that's the crazy thing is that especially the long rates don't come down. And I look at the Fed funds and they're also not really coming down. Although I think we're not going to have a lot of inflation for the next couple of months, but I don't see the interest rates coming down.
And it probably goes to risk, I'm going to guess, huh? Because we've always had that government response has been that their policy response is just to flood the markets with money. Do you see that happening? Do you see liquidity coming up at all, Charles?
Well, I did a lot of research, and I can tell you for 90% of the time, Fed funds don't influence markets. Maybe for a couple of hours, but they don't do much.
Well, they brought it down to 0 in 2007, 8, 9, 10, and then kept it down for like 10 years.
Isn't that interesting? If you look at my CNBC in 2006, it was, I think, 6.5% of Fed funds. I said they go to 0, which never happened before. And of course, we had no clue why, because the mess didn't even start, but they went to 0. So it didn't help the market.
Not at all.
No.
Not at all. So this policy response may be to get the Fed and funds rate down, but it's not going to help the long-term rates, is what you're saying.
Yeah, but what we're talking about is actually the black swan theory. For people who don't know, the black swan theory says something unexpected is going to happen and it's going to influence markets. We don't know what. We are working on when it's going to happen. I don't care why it happens.
Correct.
So I'm not an expert. It could be a virus, could be a war, I just want to know when it happens. And since nobody knows how to calculate when it happens, they're spending billions of dollars making reports to try to figure out why it happens.
Well, what do you think we should be doing, Charles? I mean, you gave some great advice. I mean, I passed that along. By the way, I want to tout your newsletter while we can. I think everybody should be taking your free trial, particularly when we have all this turmoil in the marketplace to get your opinion. And they just go to charlesnenner.com.
Yeah, and they get 30 days for free, no credit card needed, nothing. The problem is that I work against the media. If the media says the market goes up, then my letter can say it goes down. And the insiders understand what I write and why it goes down. But the small investor still listens to everybody. And like Mr. Buffett says, I never have seen a financial journalist who's a billionaire. So why do you guys listen to them? They still listen to them.
Yes. And honestly, your work, it goes right again. You're exactly correct, Charles. You're exactly correct, because you have been kind of fighting the policy. Nobody, that we had an administration here that didn't want to admit that things were not as good as what they wanted to. Our GDP was running at 6%, but they were spending 8% of deficit spending, which boosted it up 6%. And once they take that spending away, we went to negative 2%, which is what you've been saying for 3 or 4 years.
But it's an important point I want to make. There used to be, years ago, in the Wall Street Journal, a column called Heard on the Street.
Mm-hmm.
Some people wrote about. So why did they cancel it? Because they found out that the people who had, let's say, a couple of million shares of IBM wrote up IBM, so it could be creating a market. Now, one of the biggest firms that I don't want to mention by name because I don't want to get in trouble, said up to 2 months we go much higher, until all the hedge funds got out and suddenly they changed their mind and says we're going into a bear market. That's how you're being manipulated. But I'm not mentioning the name. I've been very close to that firm, so people who know who I worked for can maybe make that up. I'm not going to mention the name. And that's how how it's being played off.
Well, and from the other analysts I speak to, they tell me, and I think you've mentioned this as well, that they're looking for an analyst that has a particular opinion. And if you've got the opinion that they want, they put you on the air. If you don't get any airtime. And they've been looking for people very positive. So let me recap here a little bit. So your concern is that I think we're going down from here till probably 27, 28.
Can you interrupt 1 second? Stop
Yes.
it 1 second.
So to kind of wrap this up for people, you are looking at your charts that we're in a recession. It's already started. It's going to get worse from here.
Yeah.
And it's going to get probably on the same caliber as the great financial crisis or even worse. Personally, I think with all the debt that's out there, all has to be resolved. And I think it's going to get worse than the great financial crisis. And do you think it's going to go to 27, 28? Do you think it'll resolve by 28?
No, I think it's going to take a long time. I had a year-end target of around 4,000 on the S&P. And if that breaks, we go much lower. We're getting already, I think we're trading now 5,500, already coming down from 6,200. So it's going very fast. There's a lot of downside momentum. If people go to my website, they can see what the weekly and monthly cycle look like. So it tells you exactly for how many more weeks and how many more months it goes down and what the level is. It's just, you have to just accept that things are not moving at random. It has nothing to do with the news. Just try to watch what we do for 30 days. And we also have intraday. So also intraday, give you an example, we can say, crude oil is a buy at 9:15 in the morning at this and this price, and it goes up till 3:50 at this and this price. And don't tell me it has to do anything with the news. So that's the work we do, and you just have to get used to it, not to listen to anybody, not to the media, don't read the newspapers, just do the mathematics that we do and make a lot of money and try to save whatever you can save right now, because a Microsoft that's down like $120 or Amazon or whatever. I mean, if something is down 150%, in order to get back, you have to get up 100%. People forget that sometimes. So it's not going to happen anymore. And the same problem is in the bond market. I remember we talked about when the 30-year was trading 190, now it's 116. You never get that back.
No, tremendous. I mean, banks, their reserves were just decimated when rates went up. You predicted that, Charles. I mean, it was just truly amazing. I mean, you and I did a video, and you said this is what's going to happen, and of course, the ramifications were just amazing. That's what took down the Silicon Valley Bank. They had treasury bonds that was like 1%, and then they go up to 4%. That's a heck of a loss on your reserves.
Here's what's interesting. What I understand about AI, they have the wrong presumption, so they will never get it. You have to put a certain presumption how markets function, and from that point, AI can develop itself, but they still have the wrong presumption because they're looking still for clues fundamentally why market goes up and down. So I thought they would go behind me and come catch up, but nobody's catching up.
Well, it's a great concept, and you have such a great track record. So, do people still have a chance? If they've got profits in the S&P and the Dow, you think they should talk to their financial advisor, maybe take some of the money off the table?
No, what they should look is, and I'm really not looking for anybody to join us. The company is a very nice company. What you know is when there is a short-term low in the stocks that we were short, again, Nvidia, Google, Amazon, Microsoft, and then use the bounce to get out. The problem is that when you have to bounce, people think, oh, it's over. I don't have to go out. And they stay in. And then it's lower again. And then they send an email, what happens now? And our answer is always, we tell you when the top is and when the bottom is. And in the middle, if you want to do it yourself, do it yourself. But that's not what we deal with. So they should look for the cycle low, for the price low. Out of my head, I think the price low on Microsoft is 375. I think it was 380 yesterday or so. Went with short around 500. So we could see a bounce, and then exactly we'll write how high the bounce goes and when the cycle tops again. And then, you can cut your losses.
That's a great idea. That's just a terrific idea. So maybe stage your way out, but informed. So they can, so again, they can come to charlesnenner.com and get this report. And I'm sure you're going to like it. I bet many of my friends use it. They love it. So we've got a recession. Rates are going to go up. You and I had talked about, you thought that long-term treasuries might go up into the teens. Are we still looking at that?
Yeah. The cycle is up for another 25 years.
Wow. Do you have any idea? We've had a little reprieve here on the 10-year in the last 2-3 months. I suppose that's probably on your charts. How much longer do you suppose before we start getting rates going back up?
Well, exactly. I don't remember everything by heart, but everything is, all the cycles are being published every Sunday with the exact day. And you can see the cycle, how we calculate it and what the cycle looks like. And it gives you the exact dates, and it's there. I don't remember from, we do so many markets, from crude to natural gas, to the yen, to the Australian dollar, to the Bitcoin. There's no end to it. So, for instance, Bitcoin, we went out at 106, and the weekly cycles are down into May. Just for people who trade Bitcoin, it's not the moment to get back in.
That was great, Charles. Thank you for that. Yeah, that's great. People love Bitcoin. Charles, Donald Trump loves Bitcoin, so that's great. So, we've been talking about the fact that long-term treasuries, though, are going to go up. And and I have a lot of people in my real estate business they're looking to refinance. They had a lot of people that paid way too much for their house, and they got mortgages. They seem like they're getting a little reprieve, but it's going to get worse. Is that what you're saying to me?
Right, but there could be a bounce against. Take a look at the research. It's for free, and I cannot remember exactly to answer all your questions. I don't have it ready.
Okay, well, I think the simplest thing would be to take your free newsletter on it. So let me just recap, and I'll let you guys know that you're pretty busy. Thank you so very much for speaking with us today. So war is going to intensify. We've got the economy. We are in recession right now, and it's going to get worse, on the same level as what we experienced during the great financial crisis, or worse.
Or worse.
And the debt is not going to get better. It's going to get worse. Do you see massive defaults like in Europe? I'm looking at some just horrendous debt levels in Europe.
Yeah, but most of the debt levels are held by the local people. Like, say, if you have a treasury auction, 90% of the people in Europe take the auction. Like in the United States, it was 45% Chinese who took it, but they cut it back to 25%. So that's one of the reasons we're in trouble, and that's why the Fed had to buy up these treasuries. So Europe had its problems, but their own people are taking care of it for now.
Well, I guess I'm concerned about some of the corporations that might be defaulting on. There's trillion. I think there's $2 or $3 trillion in triple B bonds that are coming up for refinance, and a lot of people, I don't know if they can refinance. I guess I'm concerned about the defaults on those bonds. Any thoughts on that, Charles?
Yeah. That's why the bonds don't react very nicely at the moment. Under pressure. So there's a lot going on. Again, it's very fundamental. I don't know. I can only tell you what's going to happen and when it's going to happen. I don't have enough time to read all these reports. It's very interesting. I got as a client one of the biggest pension funds in the world, and they have like 30 people writing 1,500 pages, and it says, well, if this, why do we write 1,500 pages? And it says, well, we have a meeting for the shareholders. This is what they're used to. So they're used to all that nonsense and all that explanations. Not that it makes them any money. You can't fight that. That's what Wall Street is built on.
Well, from the chat, we've been talking. We're in for some very interesting times, as they say.
Yeah.
And it's going to happen very, very soon. Do you suppose we're going to start seeing problems by third quarter of this year, 2025, by mid 2025? You say we're going to see it by end of 25. You think we'll start seeing it in June, July, August?
I think it's too early. It's going to be only late 25 or 26.
So we have some time to prepare. So people should be able to get
out of prepare, but if your stocks are already down 40%, the big ones, what are you going to do?
What are you going to do?
Yeah, what are you going to do? I mean, it's a bit late.
Yeah. Well, I think I think they can recoup some of their loss. I think you have given me such great advice over the years. I mean, the shorting and the Nenner and Toll brothers on a real estate portfolio as a hedge.
I'll give you an example. We had clients that bought a 190 put on Nenner, and they sold them at 80.
Nice. Yeah, that was really good.
That finances the whole house.
Well, and in my business, I'm going to tell you, the builders are in big trouble. They bought all this land, Charles, and the land doesn't make any income for them. They have to pay for the land, and of course, you can't use the land. It's just a big debt. Well, Charles, I think this is going to be really interesting. I want to thank you so very much for.
You're going to look in a couple of months how it develops.
Yes, we'd love to do that. I'm gonna get this up, and then I cannot reiterate enough that they really should take advantage of your offer for at least you're just going to take their email. Is that all they need to give you, Charles?
No, they have to go to Charles Nenner Research Center, and they can sign up for free for 30 days.
But all they need is just give you their email. Is that correct?
Yeah, correct.
Yeah. So no charge cards, nothing like that.
Wait, my wife says something. What? Oh, email and phone number and name.
Phone number
and name.
Easy peasy. Charles, is there anything else that you'd like to do? I know that you've got a meeting you're coming up to. So thank you for.
Yeah, I got a meeting in 10 minutes, so we'll do it again in a couple of months. See how things develop.
Okay, Charles, thank you so very much. My very best to you.
Hang in there.
Bye-bye. All right, bye-bye now.